Hey everyone, I get a common question from a lot of people about how to get more than 10 mortgages in my name. How do I go about doing that? All right, let's dive on in. Boop. All right, hey guys, so how to get 10 mortgages. So what people are asking on the preference and the thing of this question is that they're talking about a conventional loan. So our conventional lenders, our preferred lenders that we have on our list, they say, well, you're maxed out at 10 loans in your name. So first off, keep that in mind. It's 10 loans in your name. So the max amount of loans is you can have 10. Now think about this though, if your spouse or significant other or a partner maybe has a job and a W-2, they can qualify for 10 loans as well. So when you go and buy these properties, first off think, I need to first put them just in my own name, not joint with my spouse. Reason being is that when it's joint, that counts as one loan for each of you. And when you buy 10, you all have 10. But if you put it under yours name, just 10, and then that other person, you all of a sudden can have 20 properties, 10 each. So that's the first thing to keep in mind with this conventional loan. Now, conventional loans are awesome. They're basically are loans that are packaged up from all these guys, and they sell it to the secondary lending market. And it's typically Fannie Mae and Freddie Mac and big lenders that go and buy these loans in like billions and trillions of dollars, and they're just buying big packages of loans. And what for them to be able to sell these loans to the secondary market, they need to qualify under all these stringent boxes and conditions. Hence why you have to have your credit score, debt to income ratio, all those things when you get a conventional loan, is because those secondary lenders, they want good quality loans and they want those to be vetted and pre-screened. So they've these conventional lenders made up these parameters. And one of the parameters is that it's too risky if you have more than 10 loans in your name given through us. So they max you out at that, and you need more reserves as you buy more. I have other videos on that, so you can check that out. But the reason why you want to get these 10 loans first before going into other unconventional loans or mortgages is that these conventional loans are really good because the rate, you're going to get a really low interest rate. For investment properties, I'm talking about real estate investing properties, we're in the 4% range, plus or minus 0.5%, depending on your credit score and condition and where the rates are today and when this video is coming out. So you get really low rates. Also, your down payment is at 20%, as low as 20% down. You can put more down and get a little better rate, but at this, it's great. Also, the part that's awesome is the amortization time is 30 years. So you can have that debt working really great for you. And also inflation is killing every day. Like you pay $1,000 today for that mortgage, but in 5 years from now, you still pay $1,000. It's fixed. So what is that called? Terms? It's fixed. The interest rate is fixed at 4% forever. So if interest rates go to 8% in 5 years, it's still stuck there. So that's what's really nice about these conventional loans. Now, the question is that I'm getting to, how do I get more than 10? So once you've maxed this out and your spouse or significant other or partner, whatever, is maxed out 10 as well, you can now dip into the unconventional loans. Now this is a whole different realm of lending. So first off, the types of people that you can get with unconventional, all of these will be under here, is you can go to local banks. Typically small banks and also credit unions will lend to real estate investors. Now they're going to vet you out. They're going to be a little pickier, and they're going to want type of different rates and stuff. Now it's very flexible in these ranges, but what they sometimes will let you do, I mean, some will only let you get 2 loans, but I've seen some let you get up to 50 plus. Just depends on the bank, your experience, and they kind of vet you out over time. But some will let you get 4 or 5 at a time, 4 or 5 more loans. And then when that bank is maxed out, you go to another bank and get 2 or 3 or 5 loans from each of them. And then all of a sudden, next you know, you're getting up to 20, 50 properties with loans to get these mortgages. The rates on these are probably going to be about 1 to 2% typically above what the conventional rates are. The down payment, some of them will let you go 20, but I'm seeing them typically around 25 to 30% down. Same with credit unions, they're kind of one and the same. The amortization, I'm typically seeing 20 toward 25, sometimes 15, sometimes 30, but they're typically around that range with the amortization because they want their money back and their principal and capital back quicker. It's just something, and sometimes typically they're going to make this fixed, but sometimes they might have a balloon, you know, so like a 3-year adjustable rate mortgage, and it might adjust with the LIBOR and like +1 or plus 0.5 on that. So go ahead and look up that up. Just, it's very negotiable, but you know, so they're kind of all over on that end. So you're like, okay, well, local banks, oh, it's too hard for me to find those, you know, whatever. There's other options as well, is you can go to also just private. So you can get a private lender that is like, you know, Grandpa Joe or, you know, Aunt Susie who has some money. You can go to anyone private and be like, hey, would you like to lend some money to me to purchase this real estate? It'll be collateralized on that real estate at a fixed interest rate. And what's nice is that you can make up all of these terms. You could make it a 100-year amortization, you know, you could make it a 1% interest rate, whatever that person's willing to take on that rate of return and how much down they're feeling comfortable. You could do 0% down or 50% down with this private person. So the sky's the limit on that. So you could find private people to lend to you, close friends and family, things like that. And it would be collateralized against the property. Okay, so also there's something called a portfolio. A portfolio loan is where you can bundle. What it typically is they want you to bundle. They want that minimum loan size to be like 500,000 or $1 million or 250,000. So you can bundle several properties together and put them all into that loan. So what I've seen some people do is they go and get these 10 conventional loans, and then they'll put it all into a portfolio loan, and thus putting that to 0 loans, and then go get the 10 loans again and just repeating. Pros and cons to that is that it does cost money to get these conventional loan, right? There's points and closing costs on all these loans. So it's kind of inefficient because you're getting 10 closing costs, then you're paying closing costs for this portfolio loan, then doing it again. What I would suggest is more find 5 houses to bundle up and put them all on that portfolio loan, because then you're paying closing costs one less time. Pros and cons to that, but I guess maybe if this portfolio loan is like a big, you can pull out a lot of cash, you've owned these properties for a while and you can refi and get the cash out, it might be worth doing. Anyways, a portfolio loan, I mean, I've seen them let you have 5 to up to, I mean, I've seen people get 500 plus, depends on that portfolio lender. You kind of got to find them. They're more kind of privatized people, local shops, things like that. Their interest rates probably going to be, you know, 1 to 3% typically above what the normal conventional rate is. They're probably going to want to see, I mean, 25 to even up to 40% down, just depends. Their amortization is typically 20 to 25. And it might be an adjustable rate typically, sometimes fixed. So that is another way you can find portfolio lenders to get more loans. Then there's non-recourse. So we have other lenders on our list called non-recourse lenders, and they'll lend to you as well. They're going to want more down. It's going to be a higher interest rate typically, but hey, the numbers still might work out. And what's nice about non-recourse is that it's not in your personal name. Maybe even the portfolio lender might be a non-recourse, where these are all typically recourse. Private can be negotiated as well, but these are recourse where it's on your credit score, where these ones will not be. Reason what's nice about non-recourse is you can go and get those loans with an IRA. So if you have 30 grand in your Roth IRA or something, you can go and self-direct that, buy real estate with that 30 grand down, get a loan for 70 from a non-recourse lender, and it's only, there's no recourse. All it is the recourse of the property. So that's kind of nice. I think, you know, just negotiable on how many properties you can have. I've seen a lot. They're typically going to be, so I mean, I'm seeing them at 6 to 9% is their typical interest rates. They're going to want 30 to 40% down, sometimes 50. Their interest anywhere from 15, I've seen up to 25, and it'll probably be fixed. Anyways, and they might have other prepayment penalties and things like that. Okay, obviously, one other way is you could partner with someone to get a loan and be like, hey, I'll put the money down, you get the loan in your name. Obviously, you need to talk to a conventional lender about that. Sometimes they're not cool with like 2 people partnering on a property and it's in one person's name, not in the others, and there's still profit splits. but other lenders are okay and cool with that if you're buying in an LLC, things like that. So that's another way to get more than those 10 loans. Okay, so guys, what I'm saying here is that you're not stuck at the 10. When you max out your 10 loans, come talk to me. We can help you find these types of other lenders to help you buy more properties. So really the sky's the limit. Their financing should not be an issue. Even above and beyond this, there is institutional. So when you get really big, like a hedge fund and buy hundreds of properties, I've seen them get like 2 or 3% interest rates, 30-year, even 40-year, sometimes 25-year AMs, and they can get really big money. But it's really like you need a minimum loan amount like 5 million, 10 million, 1 million, things like that. So there's other options as you get bigger and bigger and you grow your portfolio. The sky's the limit, really. You're not limited just with conventional loans. You can get all these different types of unconventional loans out there. So yeah, guys, thank you so much for watching this video. I appreciate it. Let me know any other ideas that you have of content you would like to hear. Smash that subscribe button, click the bell to get notifications when my next videos come out, our next videos at Memphis Investment Properties. Reach out to us if you need help with anything. Thank you so much. Bye-bye.